It is a question of morality as to whether banks can put consumers' interest ahead of their aspirations to make super profits. CBK Governor Dr. Patrick Njoroge says even if the regulator is sealing loopholes, by among others creating credit scores and a revised framework for banks to price risks, lenders still have to show that they can price loans based on the borrower's credit history for policymakers to consider lifting the cap on interest rates.
Can we focus what banks will do? And I hope we won't have to say this, that we cannot focus. It's a riddle wrapped in a mystery, inside an enigma, and that the key would be banks' internal interest, their own interest, self-interest. That would be painful. So I laid out today so that we can actually begin building the journey away from this sort of conjunction.
The central bank hopes that the development of a banking price index will help expose the so-called hidden charges by banks that hugely contribute to the high cost of credit.
Banks must fully disclose their interest rates, charges, and particularly the fees perceived by the customers as being hidden. Transparency and disclosure by banks should be a way of business and not just a regulatory requirement. Technology certainly offers an opportunity to enhance transparency and information disclosures.
According to the governor, credit reference bureaus have for long only focused on blacklisting defaulters, but failed to develop credit scores for those with a good credit history, which now needs to change.
Good credit history should be rewarded through lower interest rates. The rationale of credit information sharing is to address information asymmetry and enable banks to price credit risk more effectively. Customers cannot be treated with a broad brush, focusing on the few defaulters while not rewarding the majority of customers who have good credit histories.
Dr. Njoroge says even though financial inclusion has grown tremendously to the current level of 75.5%, the presence of large amounts of dormant accounts and insistent consumer complaints show banks need to address the quality of service.
Banks must truly adopt customer-centric business models to compete successfully in the future. Products, channels, and indeed pricing must be informed by customer needs, preferences, and affordability.
He was speaking during the 6th Annual Banking Research Conference. Nicholas Ndwati, Business Insight.